Good afternoon, traders. This is Christian from Choppy Trade Group, and this is your end of day market recap for Tuesday, December 2nd. Pretty choppy day on our hands, and just welcome back a little bit. I haven't done one of these end of day live streams since last week. It was taking a little bit of time off with the family last week. So getting back into the swing of things, risk disclaimer in front of you. Everything that we're going through, of course, in these live streams videos is for education purposes only. So we had just to kind of recap a little bit. Now I've done this for I've had some videos over the weekend for members, and we did a webinar last night too, which was really good. We always do a first of the month webinar because we have new value areas for the month, but we also want to talk about themes and what's going on in the market. And we had a really nice session talking about just the overall, like the AI theme, what's going on in tech, what's going on in some of the other areas of the market. We talked about GPUs and TPUs. I found that very interesting. I learned a lot of information from Webb Begol, who's the architect of the MarketWebs, the indicator that I use, but also he's just very knowledgeable about technology and about what's going on in AI. So in any event, that kind of helps us formulate a little bit of a plan in terms of what we're seeing with AI and some of the rotation that we're seeing on the tape. So let's get to the price action for today. Reminder that yesterday the market was down. Today was a little bit of a snapback, but not a huge move. SPY up 0.2 of a percentage point. Qs outperformed. I think that what were they down yesterday? The Qs. Let's see. The Qs were down only 0.3 of a percentage point yesterday, and today climbing 0.8 of a percentage point. Small caps underperformed. They actually closed right around the low of the day, down 0.2 of a percentage point, and IWC down 0.6 of a percentage point. The VIX, like I said, was down today, down 4%. A bit more things that you could see in sectors that were red than green. The semis were up 1.8%. They climbed from the open, and there are some standouts there, but there are also some things that really kind of reversed and went lower. The quantum group also finished. There's a lot of semis in this group. Finished up 1.9%. Tech did finish up 1%. Software up 1.1%. Uranium actually topped the day, up 2.4%. And how can I forget Bitcoin had a nice snapback move today, up 6.5%. So where does that leave us with the overall market? Well, I'll kind of give you what I think is going on right now in this market. Obviously we had a huge week last week. This week, and I'm going to move here to the charts. I'm going to move also. So let me just flip screens here to the charts. All right, so SPY. We had this big week, huge week last week, right? And then now we're kind of just in digestion. And I think part of that is because the market is kind of waiting at this point, maybe for I hate to say it, but maybe for the Fed meeting next week. That comes on the 10th. So we've got a ways for that. But Fed fund futures right now are implying that they cut interest rates. Remember, that's a lot of what I talked about, which was one of the culprits, I think, for the market going down for the majority of November. That has now snapped back to we've got a 98% chance. So this is where the market was pricing in uh, about a month ago before that last Fed meeting. And then, of course, that took a step back. Now, is that the only issue right now for the market? Well, no. And I've talked about two things. So I think that's the first thing, is that the market really wants rate cuts at this point. The second thing that we've got going on, I think, is positioning. And this one's a bit harder to see right now, but I think that we've got a little bit of an issue with positioning. I think that per what we heard from the Bank of America Fund Managers survey a couple weeks ago, is that funds are basically all in on this move. They've caught up. Remember, a couple months ago, it was the catch-up trade. Funds were caught off guard. They were not as invested as they should have been, come after April when the market started to kick back up. And we heard about just a catch up trade that had to happen. So at this point, I think everybody's caught up. And I think that's kind of what we've been experiencing over the last couple of weeks is that the market, the funds have gone full on, invested into this market, hence evidenced by the fund manager survey. Now, that's for more institutions. Well, what about retail? Well, retail, I don't have any data on this. If anybody else has fresher data, but the last information that I received about margin balances was that retail is over leveraged. So that's why we're kind of, and especially in some of the growth areas of the market, in my opinion, you've got a couple themes going on there, but one of which it just looks like the market just doesn't have any push for that anymore. And what is also happening, I think, is that retail is buying some of these moves in the first half hour of the day, and then institutions are kind of selling into that. Now, you might ask me like, well, what's Christian talking about? Q's finished up 0.8%. How much? Yeah, 0.8 of a percentage point. That's a great day. Well, it depends. If you go through some individual names, I tried actually trading this one today. This was a name that was on my watch list, but here's what I'm referring to. And you just see this a lot, not in every name, but in a lot of growth names. First, first half hour of the day looks great. A little bit of digestion. We hold in here and then we kind of fall apart. And a lot of names I think are doing this. Light, this is the optical group, it tries to go higher for the day. This day was down, I think this is down 4.7% for the day. So again, it's more or less you're seeing a lot of rotation in this market. Now, let me go back to the Qs, right? And the Qs, we've made a nice move here. Very simply, if we could stay above this 619.94 level, right, then I think that you want to be long the Qs here, right? And that kind of goes the same thing for SPY, right? And that's again, that's 680, 680.66 is the level for the month. The level for the week, we have to get over the 683.64 level. Now, let's go to IWM. This is what this looks like for the app for the so far for this week, 1 hour chart. Why is IWM going sideways? Well, my thought is why IWM is going sideways so far to start this week is because the Fed cut is now priced into the market, right? And hence IWM doesn't have a catalyst. So this is kind of why I think that we probably go sideways and continue to see this rotation into some of the underloved areas of the market. What's particularly interesting, and I was listening to CNBC earlier today, and it's funny how there's very different perspective that's going on in the market, which I find interesting. Again, there's always something interesting about the market, but depending on what your time frame is, you might be loving this market or you might not be liking it so much. Now, so what do I mean by that? Well, it's funny how you could look at this market and say one party who's long could say, I love this market, it's great. Another party could say, I'm long this market and I don't really like it. Well, okay, so what do I mean by that? Well, we're looking at the RSP. This is the equally weighted S&P. This is a tweet that I sent out earlier today. We're not far from new highs, right? We're only a percent, roughly percent and a half away from new highs. That's not far away. And that's a pretty good look. I mean, so how could you be down on the market if we're only 1.5% away, right? That's a very, that's just, it's very hard to say like that you're negative upon the market if the equally weighted S&P is so close to new highs, right? And if it does get to new highs, how could you be negative about the market, right? Well, I think that has to go. That also depends on your time frame, right? If you can kind of say, "Geez, this market has made good gains this year," right? SPY is up. Where we have 16% year to date. Qs are up 21% year to date. Small caps are up 11% year to date. Those are fantastic numbers. So overall, like if you've got that very like uh, um overall or long term, taking a step back, look at the market. Hey, this has been a great year for the market. There's no doubt about that. Now, let's talk about this from more short term perspective. Short term perspective, so you could, you could look at it this way too. You could say, wow, the market really hasn't done much in the last couple months. That argument is pretty valid too for the overall market. And that's true. If you go back 2 months and you take the percentage change in the equally weight S&P, it's flat or it's up like a quarter of a percent, right? Which is essentially flat. What about SPY? Well, I did the same thing for SPY. And if you just go back 2 months from today, um, it's up 2%, but sorry, it's up 1%. Right. So again, but if you take your snap, if you take it from here, from when this breakout point was, we're flat. So it really depends on where you kind of snap your performance. And you could make a case for bullish or not, but I wouldn't say bearish. I don't think you could get bearish about it, but you could kind of make the point where the market really is kind of stagnant over the last 2 months. Qs, by the way, are up a little bit more. I think they're up closer to 2% for the last 2 months. So 1% each month, when you look at the last 2 months. So is it, what have you done for me lately, market? Or are you taking a step back and saying, hey, this has been a great year for stocks? Really, it really depends on how your year has been going. But I think positioning, I think right now is kind of full boat, and we're even seeing some selling. Hence, there was a note that I sent out yesterday about CTAs. Now, again, this is only one particular party in the market, but we heard this a couple of weeks ago that they are all in on equities, and if the equities start to sell off a little bit, they'll be forced to sell. Hence, that's one party, and that's what they did for the majority of November. All right. So that's basically just where we are right now with this market, because I think we're somewhat stagnant. And I think that in the short term, again, long term, again, if you want to talk about for the whole year, right, you have to ask the question appropriately to the person that you're going to interview. Has the market had a good year? Yes, it's had a great year. Has it had a really good last 2 months? No, we've gone sideways. Now, again, there's bright spots and there's some spots, like healthcare, the metals group, commodities have done particularly well. Gold, silver have done particularly well, even over the last couple months. But the rest of the market, and especially, looking at, let's say growth stocks or like the IBD 50, it's not it's not great. And it's okay to say that. People get very mad when you say that to them. Again, I was listening to CNBC, and I'm not naming names or whatever, but I listened to like a panel, and they were getting very, very uptight about how you're phrasing the market this year. Um, and I think if you define the term, then you kind of get your answer, right? About, and you could go back and you could say, has the market done great over the last couple of years? Absolutely, right? It's done great over the last couple of years. But if you're more thinking about the future, and I think for this month, what we're probably going to get is chop for the rest of this week. Again, I don't have a crystal ball, but I think the market is digesting some of the gains from last week. And it is also waiting on that Fed meeting. And we're now 98% priced in for a Fed cut. And then maybe we could possibly, if we sell off or if we kind of don't do much, maybe we do get that Santa Claus rally. But you have to kind of keep in mind that everybody's going to be anticipating that. And that, of course, is just the last 5 trading days of the year, right? That doesn't start when you put up your Christmas tree, right? That starts when just the last 5 trading days. Okay. So what, is there anything that's acting decent in this market? Well, sure. There's some things, gold. I think I actually added to my gold position, a little bit of a check back here. I'm still long some FCX, even though FCX was down today. I'm trying to get this VPOC up here, taking some targets. So I've kind of moved a little bit into some of the commodity space. ONDS made a nice move. Again, you kind of have to be patient here. And that's kind of where I'm going to wrap this video up here in just a second. But here's your move back into the top of the value support and holding in here. Some of the semis are acting well. Look at TSEM. They're just not your very popular names, right? We've talked about this one, had good earnings, came into the 20-day moving average, moved up. I actually sold this yesterday, by the way. I did not get today's gains of up 4%. Also, another one is Teradyne that's been acting really well, right? So again, this is not as popular as a CRDO, right? Which had a great overall move, up 10%, but not a great, like, this isn't great price action, I would say, for the day. We went all the way up to 212 and closed uh, below 190. So that's really tough. And that's kind of what this market has been like, I would say, over the besides last week. Last week was a great week. Holiday shortened week, but it was a great week. But the majority of price action is kind of like this, where, hey, CRDO, if you're long it into today, you're happy, plus 10%. If you tried trading it today, you're probably not too happy with it. Depending, unless you shorted on the highs today. So that's where I kind of want to leave off this video. I'm also looking, by the way, at Rivian, just to kind of give you a couple stocks that I'm interested in. But again, this is a tough one, right? Maybe notice this has been putting in higher lows. So I'm looking for this to kind of break out. We'll see. That's Rivian. But overall, I think, going back to what I was saying about how we're trading in a range, back and forth, back and forth, back and forth, if you're patient and you're finding trades around the lower end of the range, you're doing okay in this market. But if you're trying to be a momentum trader and trade breakouts, the breakouts are failing, at least over the last 2 months. All right. So put things in perspective. Right now, it's tough to trade this market. It's not easy. And hey, if you're crushing it and you're killing it in this market and timing all these bottoms perfectly, you're doing really well. And if you're buying the dips, right, and waiting for those little turns. But if you're doing anything else right now in this market, and I'm just using RSP as an example, you're probably not thrilled with this market, and that's okay. But have the perspective, 1 year versus the last 2 months, right? And I think that kind of having understanding that a lot of times it's just a different time frame can really help understand, what you're how you're doing, right? And again, I think it comes to, if you're trying to trade every day, right, you want that immediate gratification of profits and building your account. But sometimes the market's just going to go sideways and digest gains, and that's kind of what we got going on right now. Guys, have a great